Hello, everybody. Welcome to the Anomaly Advanced course, Core Content Lesson 1. We're going to be covering phases of price. In this first section here, we're going to be covering if-then statements. So firstly, let's cover consolidation. So one thing we must know about every single phase of price, consolidation, tracement, reversal, is that they all start and end with expansion, right? So if the market expands, right, consolidates, then what can we expect? We will always expect continuation, right? Consolidation is a continuation signature, meaning that it cannot reverse from consolidation. Of course, the market can reverse consolidation, but we're not going to engage with that, right? If it consolidates, we're automatically assuming it's going to continue. But one thing we must understand is that it actually does not have to manipulate this low. We just demand it to manipulate this low, right? Because that is the only way we can ever expect it to expand, right? How are you going to expect price to expand within consolidation with no reversal signature, right? So ideally, we want to see that A and B, right? That expansion, that accumulation, manipulation of the consolidation low, that prints a reversal, and reversal is the trigger for expansion. So now let's go over the if-then statement for retracement. So like I said, every single phase of price starts with expansion. So as you can see, price expands, it retraces. What will happen next? It will expand. Now let's go over the if-then statement for reversal. If price trades into a relevant level, prints a reversal signature, what should follow? Expansion. Now let's cover phases of price and their signatures. Starting off with expansion, we're going to be highlighting highs and lows. How does price react to highs and lows within an expansion? So firstly, after price puts in a reversal and gives us that V shape away, that reversal signature, it should be displacing through highs and rejecting lows. Now we're going to be talking about order flow within an expansion. What should we see happen? Respecting opposing candles and fair value gaps. Another thing to talk about is the retracement size within an expansion. After price puts in a reversal on its way to a draw liquidity, we should not be seeing deep retracements. Ideally, you don't even want to see price hit EQ, especially deep discount within a bullish expansion. So if you ever see a deep retracement, that is a red flag. So looking here with higher time frame expansion candles, that is exactly where this small wick logic comes from. As this small wick is just a lower time frame retracement, right? Respecting equilibrium of the previous candle's range. We don't want to see those deep retracements into EQ of the previous candle's range. Now let's go ahead and talk about consolidation signatures. So what will we be seeing within a consolidation is after price expands, price will stay range bound in between a low and a high, creating failure swings on both sides. We will not engage with this price action until one of the sides of the range is met. Another way consolidation will look is what we call seek and destroy, or a broadening formation. Pretty sure you've heard this term. So if price expands, consolidates, and manipulates the high first, if you're actually bullish, maybe there's a draw on liquidity up here, not yet taken. So you're not really expecting a bearish move lower. This manipulation can just be used to go lower to manipulate the range low. And if price fails to displace through this low, that is what we call a seek and destroy market. And it is a type of consolidation. You can actually trade this back into the high to get back on side with order flow, because remember, price is not reverse consolidation. Now let's go ahead and talk about retracement signatures. This is when we expand, we start to come back into the range, but with the way price prints, that's very telling. What you're going to see is very close proximity highs, right? Very deep pullbacks back into the retracement point high, very lackluster in its movement. And typically you'll see price retracing after we hit objectives, and it will trace into gaps. So another way price will look within a retracement is if price expands, then consolidates, and then trades into the low of that consolidation, but fails to manipulate it. This is typically a higher time for consolidation. There will be a higher time for fair value gap in the range that it wants to go to, instead of manipulating this consolidation low to then go higher, because we know that price cannot reverse consolidation. So typically, this is another way you will see retracements form. So now let's go ahead and talk about reversal signatures. This is simply when price expands into a key level, expands away, giving us that V-shaped signature. This is what you will look for on all time frames to confirm your high probability reversal. Now let's talk about the confirmation to a reversal. It is simply the expansion into the key level. That expansion into the key level creates an opposing candle or an order block. When price expands away from the key level, that creates a CSD. When we close above the opening price here, and that change of state delivery is your confirmation. So another reversal signature that we will always be using is SMT divergence, pairing that with our key level that we want to see price reverse off of. Now let's go ahead and talk about higher time frame signatures. So here we have consolidation. This is where price expands. The next candle fails to take out the previous candle's high and the previous candle's low. This inside bar is a lower time frame consolidation. Now let's go ahead and talk about higher time frame retracements. This is where price expands and leaves these close proximity highs, right? This previous high was not taken, this previous high was not taken, and this high here is very close proximity to the previous high. Well, they all are. That's what's creating that low resistance liquidity or those failure swings, those deep pullbacks into the point of retracement. And this is typically that continuation signature that we want to see, right? Price trade to this gap and expand again, right? Expansion, retracement, expansion, because consolidations and retracements are both continuation signatures. Now let's go ahead and talk about expansion signatures. This is simply, right, having that small wick within respect of the previous candle's closure. So as you can see here, we have that reversal candle, right? When a reversal candle closes near its own high, you mark out the whole entire range. You almost treat it like an expansion candle, right? So we want to see this candle 3 have that small wick. That is that expansion signature, right? We want price to expand away from the reversal. And as you see, it expands away. Once it closes an expansion candle, we essentially do the same thing, right? Mark out the whole entire range. This is where we want to see that continuation towards our drawn liquidity in respect of that previous candle's range, forming that small wick. Now let's go ahead and talk about higher time frame reversal signatures. That is simply a C2 or reversal candle after hitting a key level. Now let's go ahead and put it all together using the higher time frame and the lower time frame to confirm it. Firstly, let's cover reversal. So here, as you can see, we have our higher time frame key level, which is a fair value gap. This candle hits that fair value gap, so we are within a higher time frame C2 candle or reversal candle. And the way to confirm this reversal candle is when we drop down to lower time frame. This would be the lower time frame view within this higher time frame candle. We want to see those V-shaped signatures, that reversal signature after hitting that key level, right? So this high right here would be the previous day's high or the fair value gap low. And as you can see, when price trades into it, it's creating these swing points, right? And those swing points are confirming the high of this reversal candle, right? They're creating that V-shaped signature, right? So look over here. What do we see? Expansion to the high, expansion away, change of state delivery, right? Candle 1, candle 2, candle 3, creating that expansion away. So even on the lower time frame, you're going to want to see the same thing, right? To confirm this C2 candle, you want to see the same thing on the lower time frame, right? So let's say this is the daily chart. This is the hourly chart. On the lower time frame to confirm this C2, maybe the 5-minute V shape, right? Now let's go over consolidation. So once price reverses, we are now in the expansion phase. So what do we want to see in expansion? On our way to the drawn liquidity is consolidations and retracements, because they are what? Continuation signatures, right? So as you can see here, within that previous candle, right, we hit that previous day's low, which is right here. We want to see this fail to be manipulated, right? Because this is our overall draw, right? What is this universal model? Internal to external, right? This is the actual drawn liquidity that's important, right? Anything internal to the reversal out of the key level in this higher